All right, so as we wrap up the year, I bet a lot of you out there listening are probably thinking about your portfolios
Yeah.
and maybe wishing that they were, in a slightly better spot.
Oh, yeah, definitely.
But, before we all get swept up in that end-of-year scramble,
Yeah.
we wanted to take a deep dive into some practical steps that you can take to set yourself up for success in the new year.
Exactly.
So we've got some insightful articles, research ready to unpack.
Really good stuff.
So let's get started.
Awesome.
So one thing that I always find kind of interesting about this time of year is, everyone talks about year-end portfolio reviews.
Mm-hmm.
And a lot of times it's framed as just like checking the numbers, seeing how you did.
Right.
But I feel like it's so much more than that.
Oh, absolutely. It's a chance to kind of dig into your investment strategy and really think about, what's working, what's not.
Yeah. Like, what do you really mean by that?
Well, this Motley Fool article that we have actually highlights the importance of having a clear investment thesis for every holding in your portfolio.
Okay, so it's not just about, like, whether a stock is up or down.
Right.
It's about, like, why you own it in the first place.
Exactly. It's about like being able to articulate the reasons behind your investment choices.
Okay.
Like, what makes you think that this particular company will outperform in the long run?
Yeah.
What are the potential risks and rewards?
That makes a lot of sense.
You know what I mean?
Could you give me, like, an example of, like, what a really strong investment thesis would look like?
Oh, absolutely. So let's take Microsoft, for instance.
Yeah.
A really solid thesis might focus on their diverse revenue streams.
Mm-hmm.
We're talking hardware, software, cloud services with Azure, LinkedIn, and even gaming.
Right.
And then, not to mention, they've got strong financials with consistent cash flow, which allows them to pay dividends and buy back shares.
I feel like they are kind of like a company that's, like, built to weather
Exactly.
different economies and different, like, all the ups and downs.
They can withstand those downturns and, make strategic acquisitions.
So that's like their market positioning.
Yes, exactly. That's another key element of a strong thesis.
So even with, like, a really solid blue chip company like Microsoft, there are still risks to consider.
Oh, of course.
Like, what would those be?
Well, in Microsoft's case, their high price to earnings ratio means that they need to deliver significant growth to justify their valuation.
Yeah, that makes sense.
So a really good thesis will recognize those challenges and weigh them against the potential rewards.
I feel like that's what helps you avoid making those, like, rash decisions, when the market gets volatile.
Absolutely. Having that well-defined investment thesis for each holding gives you a framework for your decision making.
Okay.
It helps you to stay focused on those long-term goals.
Right.
And avoid those emotional reactions to the short-term fluctuations.
Yeah, because those are inevitable.
Oh, they are, definitely.
So, okay. So we've talked about, the importance of a thesis, like really getting clear on that. But what about when your portfolio allocation starts to, like, drift?
Right, yeah.
Like, I was reading about how the performance of, like, NVIDIA and Meta platforms has really shifted things this year.
Yeah.
And, even with the S&P 500 showing overall gains.
Yeah, it's easy to get caught up in those headline-grabbing stock movements and start to feel pressured to chase those returns.
Like, oh, I got to get in on that.
Exactly.
Yeah.
But, selling a stock just because it went up can actually be really counterproductive.
Really? Why is that?
Because if you're selling without a reason that's tied back to that investment thesis we talked about, you could be missing out on future gains.
Oh, that's interesting.
Yeah, it's really about constantly evaluating whether those holdings still align with your overall strategy and your financial goals.
Okay. So how can we, like, approach those allocation shifts in a more strategic way?
Well, there are a couple of different paths that you could take.
Okay.
So, if you find yourself overexposed to a particular sector, let's say mega cap tech, you could direct new capital towards those underrepresented areas.
Okay. Like, what would be some examples of that?
Well, you might consider diversifying with dividend stocks, for instance, or exploring growth companies in other sectors.
Right.
Or even adding a broad market ETF, like the Vanguard Mega Cap Value ETF, to give yourself that broader exposure.
Yeah, ETFs are really good for that.
Oh, yeah, absolutely.
So that's one approach. What would be another approach?
The other approach that I was thinking of is particularly relevant if you're in what's called the capital preservation phase.
Remind me what that is again.
Yeah, so the capital preservation phase is typically when you're closer to needing the money that you've invested.
Okay.
So maybe for retirement or another major financial goal.
Got it.
And in this phase, you might shift your focus to companies that are valued for their current performance and their stability, rather than maybe those with like super high growth potential, but maybe greater volatility.
So you're aligning your investments with kind of like your changing risk tolerance as you get closer to needing the money.
Exactly.
So what if you are still in that wealth building phase,
Right.
where it's like focused on that long-term growth? Is it just all about like finding that next hot stock?
Well, it can be tempting to focus on chasing those high returns.
Yeah.
But here's a fascinating insight.
Okay.
Consistently saving, even if it's small amounts, can have a bigger impact on your long-term financial success than you might think.
Okay. I'm intrigued. Tell me more about that.
Yeah.
So how can saving possibly like outpace those impressive market returns that we always hear about?
Well, let's look at like a hypothetical scenario.
Okay.
So imagine you've got two investors, right?
Okay.
They each start with $20,000 and they invest for 10 years.
Okay.
So investor A earns a respectable 10% annual return.
Okay.
And they diligently save an extra $5,000 every single year.
Okay.
After 10 years, they end up with over $131,000.
Okay. That's not bad, right?
Not bad at all, right?
Yeah. Shows the power of compounding over time.
Exactly.
So what about investor B?
So investor B is our Warren Buffett.
Okay.
They're achieving a remarkable 20% annual return.
Well,
But they don't add any additional savings over those 10 years.
okay.
Despite those incredible returns, they end up with just under $124,000.
Wait, so even with double the return,
Yeah.
they ended up with less.
Less.
That's pretty eye-opening.
It really highlights the often underestimated power of consistent saving.
Wow.
Now, imagine if investor B had also saved that $5,000 a year.
Okay.
Their total would have exceeded $253,000.
Wow, that's a huge difference.
It's massive, right?
So you're saying like even if I don't find the next Apple or Tesla,
Right.
just consistently adding to my investments can really make a big impact.
Exactly. And this is particularly crucial for those who are in the capital accumulation phase where time is on your side.
Okay.
Setting those concrete savings goals for the coming year
Yeah.
can be just as impactful as researching potential investments.
I like that. I feel like this is really changing my perspective on how I think about like building wealth.
Yeah.
It's not just about picking winners in the stock market.
Right.
It's about consistently like setting money aside.
It's about cultivating those wealth-generating habits that compound over time.
I love that.
And, this brings up another point I wanted to touch on from one of our sources.
Okay.
The need to, manage our portfolio allocation thoughtfully.
Right. And we were talking about how like companies like NVIDIA and Meta have been making these big moves.
Yeah.
So how do we avoid getting swept up in those fluctuations and making impulsive decisions?
It all goes back to having that clear investment thesis that we talked about earlier.
Right.
Before you make any changes to your portfolio, you've got to ask yourself, does this move align with my overall investment strategy and the reasons that I own these particular assets?
So it's not just about chasing returns.
Right.
It's about making sure that your investments are still serving their purpose within your portfolio.
Exactly. So let's say you're concerned about being overexposed to the tech sector after that run-up in NVIDIA stock.
Right.
Instead of panic selling, you could consider directing new funds towards other asset classes
Okay.
to rebalance your portfolio.
Yeah. What are some smart ways to diversify away from tech in today's market?
Well, you could explore dividend stocks, for example, which provide a steady stream of income.
Okay.
Or you could look at growth companies in less volatile sectors.
Okay.
And of course, you could always go with that broad market ETF, like the Vanguard Mega Cap Value ETF.
Yep.
Offers diversified exposure at a low cost.
And it's important to remember, like, diversification isn't just about spreading your money across different stocks.
Right.
It's also across different asset classes.
Absolutely. And as we discussed earlier, if you're in that capital preservation phase, you might prioritize investments that are less focused on growth and more on generating income or preserving capital.
Right. It's all about aligning your investments with your time horizon and risk tolerance.
Exactly.
So we've talked about the investment thesis, we've talked about managing those allocation shifts, and then we've talked about the power of consistent saving.
Yeah.
How do we put all this into practice?
Right.
It can feel overwhelming
Yeah.
to try to tackle everything at once.
It's a lot. It is. I would encourage our listener to pick one key takeaway that really resonates with them the most
Okay.
and focus on implementing that one thing.
I like that don't try to do everything at once.
Yeah.
Just focus on making one meaningful change.
And, small changes consistently applied can lead to those significant results over time.
I think for me, like the concept of the investment thesis really stands out to me
Mm-hmm.
because it's like having a roadmap for your investments.
Absolutely.
It helps guide your decisions and avoid those emotional reactions.
It's like a guiding principle.
But how do you actually go about, like, creating one of those?
It all starts with research. You
Mhm.
really have to dig deep into the companies that you're invested in, understand their business model, their competitive advantages, their management team, and the potential risks that they face.
So before I invest in a company, I need to understand what they do, how they make money, and, like, what challenges they might encounter.
Exactly. You wouldn't buy a house without like a thorough inspection, right?
That's a great analogy.
So the same principle applies to investing.
Okay, so once you've done your research, how do you actually articulate the thesis?
Think of it like a story.
Okay.
What's the company's narrative? Where are they headed?
Mm-hmm.
What's your conviction in their ability to achieve their goals?
Okay.
And importantly, how does this investment fit into your overall portfolio strategy and your financial goals?
I like the idea of, like, thinking about it as a story.
Yeah,
It's like understanding the company's journey and where you believe they're going.
exactly. And it's not just like a cold, hard financial analysis.
Right.
It's about painting a picture of the future that you envision for that company and why you're betting on their success.
So it sounds like this isn't like a one-time exercise. It's something that should kind of evolve as the company and the market changes.
You got it regularly. Revisiting and refining your thesis helps ensure that you're still on the right path.
So it's about staying informed, being adaptable, and recognizing that investing is a dynamic process.
Exact.
It's not like a set it and forget it thing.
It's a continuous learning experience.
That's what makes it interesting, right?
That's what keeps it engaging, for sure.
It's like you're having this ongoing conversation
Yeah,
with your investments,
I like that.
making sure that, like, you're both still on the same page.
That's a great way to put it. So, as we kind of wrap up this deep dive,
Yeah.
it's important to remember we've covered a lot of ground today.
We've explored, having a well-defined investment thesis, and we've talked about strategies for managing our portfolio allocation,
Yeah,
and then even uncovered the surprising impact of just consistently saving.
absolutely. It's a lot to take in, but these are all practical steps
Yeah.
that you can start implementing today to improve your financial well-being.
Exactly. And as we head into the new year, I think it's helpful to think about, what's that one specific action
Right.
that you can take to set yourself up for success?
So now that you've had a chance to really analyze your portfolio and think about those savings habits,
Mm,
what's like one concrete step you'll commit to before the year ends?
yeah.
It could be setting up those automatic contributions to your investment account,
Okay.
or researching a new sector to diversify into,
Yeah.
or even just scheduling a meeting with a financial advisor.
I love that challenge.
Yeah,
It's about turning these insights into action.
it is.
And even those small changes consistently applied can lead to some significant results over time.
Oh, absolutely. And, remember, the journey to financial well-being, it's a marathon, not a sprint.
Yeah,
There will be those market ups and downs.
of course.
But by staying focused on your goals and making those informed decisions,
Right.
having a plan, you'll be well on your way to achieving that financial future that you envision.
Absolutely. Well, thank you so much for joining us on this deep dive into year-end portfolio moves. We are here to support you on your financial journey, so stay tuned for more insightful explorations.
Yeah.
And until then, happy investing.